There are so many different ways a startup can actually get funded, and each comes with its own pros and cons. And today, we're going to be diving into the good, the bad, and the ugly of the world of equity crowdfunding. Hey there, my name is Chris Gravy. I love teaching everyday investors how they can dive into the world of startup investing. I've invested in 25 deals worth over $750 million and growing. I'm here today to teach you what equity crowdfunding is. So, what is it? Well, to know what it is, we have to go back to 2012 when President Barack Obama signed into law what's called the Jobs Act in the Rose Garden. Now, he signed it in 2012 and it went into law in 2016. Basically, inside of that legislation, it made it possible for everyday investors, you and me, meaning not rich, fat cats, and accredited investors. It means everyday investors could now invest in early stage startups. Now, you may not know this, but since the Great Depression, there were laws that were signed that made it impossible for everyday investors to actually invest in startups. Now, they say the rules were to protect everyday investors, but I'm not sure that's the truth. But here's the thing, this new law makes it possible for you to own equity in a company. So, equity crowdfunding. It's not crowdfunding like Kickstarter or Indiegogo. This is crowdfunding where you can invest in a startup and you can get shares and a piece of ownership in that company. Now, let's talk about the pros of investing in equity crowdfunding. Well, look, the potential returns. I mean, you've heard all these stories of people who invested a few $1,000s and then the company became a unicorn worth over billions of dollars and they saw massive amounts of returns. Now, that is the ultimate pro, is that you invest in a startup at its earliest stage and its riskiest stage, but you have the potential to see massive upside when they either go public someday or if they get acquired. That's the biggest pro of equity crowdfunding. Also, you can invest in companies that you believe in, which I think is really cool. If there's a product or a company or a founder that you believe in, you could back them with your money, own a piece of that company, and hopefully and you get a big return on your cash. Now, let's talk about the cons of what happens if you invest in the world of equity crowdfunding. Now, we're 8 years at the time of recording this, 8 years since this entire legislation went into being. And so all things considered, when it comes to the state of an investing space, that's a really, really short period of time. I mean, even crypto has been out longer than that. And so there's a lot of learning that's happening now. More and more actual legit companies are coming into the space, but there's a lot of other companies coming in that just aren't ever going to make it. They may go say, this is my last ditch effort to go try and raise some money. They get some money from everyday investors like you and me, and they shut their doors and you lose that money forever. So that is the really biggest con. And the other thing is, you got to know that investing in early stage startups, it's just risky. There's a stat out there that talks about how 90% of startups fail in their very first year. And even after that, the startups that do make it past the first year, there's still a highly likely chance that they're actually not going to make it as well. So investing in startups is risky. But I guess investing in anything is risky. You just have to understand your appetite for risk and what you're willing to take. For me, I love investing in startups. I've invested in 25 startups. I've invested alongside Mark Cuban, Kevin O'Leary, and I'm constantly looking at finding deals, talking to founders, doing due diligence. And this is a big portion of my strategy and my portfolio when it comes to seeing a return for my family with the goal of producing generational wealth. So for me, I love it. I invest in it. I understand the risks in it. And I understand, because I've been looking at companies for so long, what a good company looks like and what a not so good company looks like. So let's dive into some examples of some businesses that have used equity crowdfunding as a way to raise money for their company. The first one I want to talk about is a company called Beehive. Now, if you're in the world of newsletters and sending emails, more than likely you've heard of Beehive. Well, they recently opened up a round. They did just over $1 million and they opened it up to their subscribers. And that round filled up in like almost 2.5 hours. It was gone. And so that was pretty cool to see them raise money from their subscribers. Another one is Substack. They're in the world of blogging. They recently raised $7.8 million from their subscribers and the general public. Another company is called Zenefits. Zenefits raised around $50,000 in a seed round. And what's crazy is they went all the way up to a $4.5 billion valuation, which is crazy. Think about those people who invested at the very beginning, $50,000 went up to $4.5 billion valuation. Well, it didn't last very long because they ended up having some rocky waters and ended up selling to a private equity firm for an undisclosed amount of money. But I would imagine those who invested early saw a really nice return on that day, even with the bad news. And there you have it, equity crowdfunding. This is a way for the people, the crowd, to invest in a startup, get equity, get shares, and get a piece of ownership in startups for the hope of a big return on the backside. Well, I hope this video has been helpful for you. Hey, look, if you're new to the world of startup investing and you want to see the top startups that I'm watching every single week, I've got a free watch list for you. All you have to do is click the link down in the description, come join the newsletter, and I'll send you those 10 hot startups right now to your inbox. I hope you enjoyed this video. If you did, you're going to like this one right here, and you're definitely going to like this one right here.